Bitcoin is 10% of the global store of value market today. That market is Bitcoin and gold. So Bitcoin is 10% of that market. If we look over the last 20 years, the size of the gold market has risen by 10x. Gold is a 10x from 2005. If that happens again, 20 years from now, gold is another 10x. The store of value market is another 10x. And Bitcoin is still just 10% of the market, 10x over the last 20 years. All you're expecting is that process to continue, right? It will 10x again. And you expect Bitcoin to come to be roughly as large as gold. If those two things happen, you end up with $6+ million Bitcoin over the next handful of years, and the stablecoin market will grow 10 to 20x over the next few years. That's consensus. And then the second bet, that Solana will take a growing share of that. I mean, look, in 10 years, I think it could be $1 trillion asset. In 5 years, I think it could be $1 trillion asset. If that's the box you're putting me in, then Bitcoin, Bitcoin, Bitcoin. The reason for that is that I have every confidence that Bitcoin will win the digital gold store of value monetary asset space.
Bitcoin has been struggling lately, and many investors are growing worried. The price has pulled back from its highs, the market feels uncertain, and doubts are creeping in about whether the bull run is really over. Headlines are focusing on short-term volatility, and even some crypto professionals are questioning whether Bitcoin can sustain its momentum. The sentiment has shifted, and fear is spreading faster than conviction. But while most people are watching the daily price swings and panicking, something much bigger is happening beneath the surface. Over the last 20 years, gold's market cap exploded by 10x, rising from roughly $3 trillion to over $25 trillion. This happened quietly, year after year, as currency debasement accelerated and investors sought protection. Now, Bitcoin stands exactly where gold stood 2 decades ago, valued at around $2.5 trillion, and the same forces that drove gold higher are now pushing Bitcoin forward with even greater intensity. Matt Hougan, Chief Investment Officer at Bitwise, says Bitcoin could reach $6.5 million per coin within the next 20 years. His reasoning is not built on hype or wild speculation. He points to 2 simple bets. The global store of value market will continue to grow, as it has for the past 2 decades, and Bitcoin will take an increasing share of that market from gold. If both happen, which Hougan believes is the most likely scenario, the opportunity ahead is massive. Let's hear directly from Matt Hougan for more insights. Please don't forget to like, subscribe, and enable notifications. Thanks for tuning in. Enjoy the rest of the video.
Bitcoin is at 80K or 120K or 150K. You tell them it's still early.
Super early.
Why?
Well, let's think of it 2 ways. If you just want to take Bitcoin, let me restate. One of the reasons it's so early, the one reason I know it's so early is I go and give speeches to rooms full of financial advisors. These are the people that control most of the wealth in America. And you'll have 1,000 of them in the room, and you'll ask how many are allocating on behalf of their clients. And it's maybe 5% of them. Maybe it's 10% of them. But until it's 90% of them, and until they have 3 to 5% in crypto, then it's definitionally still early. So that's one piece of the puzzle. The other piece of the puzzle is Bitcoin's still 1/10 the size of gold, maybe less. So until that room is every hand, then we can come on this podcast and I'll say it's getting late. So look, Bitcoin is 10% of the global store of value market today. That market is Bitcoin and gold. So Bitcoin is 10% of that market. If we look over the last 20 years, the size of the gold market has risen by 10x. Gold is a 10x from 2005. If that happens again, 20 years from now, gold is another 10x. The store of value market is another 10x. And Bitcoin is still just 10% of the market. Every Bitcoin's worth $1 million. That's literally all that needs to happen. I also think Bitcoin's going to steal market share from gold for that growing market. So right now it's about 10%. Could it get to 25% in 10 years? Could it get to 50% of that market? I think it's better than gold at most of the things gold does. And if it gets to 20%, Bitcoin's price doubles. If the size of the market 10x's and Bitcoin steals its share, you're talking about Bitcoin being in many millions of dollars. And I think that's actually the most likely scenario. Just to hit one more point on that, all you have to believe for that to be true is for what's happened for the last 10 years to continue happening for the next 10.
Which is
which is the store value market growing as people worry about the dollar, and Bitcoin taking an increasing share. It's been taking share for the last 10 years. You just have to assume those trends continue, and you get Bitcoin in millions of dollars. I do think the fact that gold is 10x over the last 20 years is something crypto investors don't understand, right? Bitcoin today is a larger asset. It's like a $2.5 trillion asset. It's roughly the same size as gold was when the gold ETF launched. And that market has just grown and grown and grown. The reason it's grown is probably obvious, which is that US dollar debasement has been happening for 20 years. We now have $38 trillion in debt. And gold is increasingly accepted as part of institutional portfolios. Maybe it's not every portfolio, but it's no longer unusual to hold gold. 20 years ago, it was unusual. And so as we continue to print more money, as we continue to accumulate more debt, you expect this market to continue to grow. But yeah, gold 10x'd over the last 20 years. It's a remarkable thing. And I suspect it will 10x again over the next 20. And the really important thing for Bitcoin is all you need for Bitcoin to 10x is for that market to 10x. Even if Bitcoin just treads water in terms of its relationship with gold, you just need what's happened in the past to continue happening, and you end up with $1 million Bitcoin. The same reason people are buying gold are the reason they're buying Bitcoin, which is they no longer trust the fiat system. They want some of their money in a different form of money that's not controlled by the state and that they can hold on a self-sovereign basis. The people who believe that in gold right now primarily are central banks. The people who believe that in Bitcoin right now are primarily individuals and wealth advisors and some institutions. But ultimately, it's the same trade. It's that most people's economic lives have 100% exposure to the fiat system. Does that make sense? Or do you want 1, 2, 3, 4, 5% exposure to something else, whether it's gold or Bitcoin or a combination of both? It's just a prudent diversification. All you need to get to that number is for the store of value market to 10x again. As I discussed, it 10x over the last 20 years. All you're expecting is that process to continue, right? It will 10x again. And you expect Bitcoin to come to be roughly as large as gold. If those two things happen, you end up with $6+ million Bitcoin. That's not a big jump. You're not suggesting a huge difference. You're just suggesting what's been happening will continue to happen for another 20 years. Well, you could be wrong on it in two ways. Obviously, so you have two bets. You could be wrong on each of those bets. Gold could not cede market share to Bitcoin. Now that runs against most of history. Like most of modern history is digital things stealing market share from physical things. But you could be wrong on that. Gold could vacuum up all of that opportunity. Or you could have the store value market not continue to grow. And the primary reason for that is if governments stopped printing debt and printing money. I'm just very skeptical. I don't see.
How is that possible?
It's impossible.
It's impossible.
It seems to be impossible. It seems to be impossible. It's not impossible. You see it in some places. We've seen it in Argentina recently, right? They went on a true austerity bent. It's not impossible, but it looks impossible in the current system where the impetus just seems to be spending more money. And that's part of the reason you want to do this. And what if I'm wrong by half? What if it gets to 3 million and it's a 30x? That's actually not so bad either. And I think that's the overhang of that money printing. And that's why Bitcoin's $100,000, why gold is 4.
And that's not getting any better.
It's going to get worse. Of course it's going to get worse. That's even before we get to the point where we, in the US at least, face down the Social Security budget, which is net negative. We have unlimited liabilities, and we're just going to need to print our money in order to do so. So absolutely. To go back to your question, I think you both keep pace with that inflation, but you also do more, right? To go back to that COVID example, the dollar's down 30%, Bitcoin's up 30x. More people are going into scarce assets. Both Bitcoin and gold are scarce assets. So if demand for them increases, you're going to not just keep pace, but actually do relatively better over time. I mean, to go back to those two bets, you can think of those two bets as different. The store of value market increasing, that's a mix of wealth building, but also a lot of just matching those returns. The real wealth building increment is Bitcoin taking share from gold. That's one of the reasons actually I love Bitcoin more than gold in a portfolio, because to get to your point, you said, why 5%? 5% Bitcoin because it's getting those two boosts at once. can serve the need, whereas 5% gold will probably just, help you keep pace, right, with that portion of your portfolio, won't lose its purchasing power. So they are very different investments.
Hougan's thesis rests on what he calls the 2 ways to win framework, and it applies perfectly to Bitcoin. The first bet is straightforward. The global store of value market, which includes both gold and Bitcoin, will continue to grow over the next 20 years, just as it did over the last 20. If that market grows another 10x, and Bitcoin maintains its current 10% share, every Bitcoin would be worth $1 million. That alone requires nothing extraordinary, just the continuation of trends already in motion. The second bet is where things get really exciting. Bitcoin will not just ride the wave, it will steal significant market share from gold. Right now, Bitcoin is better than gold at nearly everything gold does. It is easier to store, faster to transfer, more divisible, and probably scarce. If Bitcoin rises from 10% to 25% of the store of value market, while that market also grows 10x, the math points to Bitcoin in the many millions of dollars per coin. What makes this compelling is that it does not require faith in some distant future technology. It only requires what has already been happening to keep happening. Governments will keep printing money, people will keep seeking protection from debasement, and Bitcoin will keep taking share from gold. Let's hear more from Matt Hougan.
They both seem like very good bets to me, to be honest. So to take the tokenization and stablecoin market, I'm not the only one who thinks that's a good bet, right? The US Secretary of Treasury expects the stablecoin market to 12x over the next 4 years. The CEO of BlackRock, the world's largest asset manager, says every asset, every fund, ETF, stock, bond, real estate will be tokenized. Who am I to disagree with the Secretary of the Treasury or Larry Fink? I think they're probably right. So I feel very good that the tokenization market will grow 100x over the next handful of years, and the stablecoin market will grow 10 to 20x over the next few years. That's consensus. And then the second bet, that Solana will take a growing share of that. Look, Solana is a challenger in these markets. Ethereum's the dominant asset. I love Ethereum. It has the lion's share of the stablecoin market. It is the leading play on tokenization, but Solana is a legit competitor with an interesting technological differentiation. And importantly to me, it's extraordinarily easy to use. And the community has a ship first attitude. And you can see it winning an increasing number of mandates. So it's behind ETH. I'm not saying it's going to catch up or match it, but I think it's going to rise up and be the legitimate competitor in this space, and we'll see how it sorts out. Right now, it's a tiny share of the market, and it's also a very small asset. It's like $100 billion asset. It's 1/5 the size of ETH. How often do you talk about Solana versus Ethereum? Do you do 5-to-1 ETH to Solana?
Probably much more, yeah.
Probably much more. You may talk more about Solana and ETH, and yet it's so small. Like, I think...
Why?
It's newer. It was outside of the regulatory perimeter under the previous SEC. So if you were an institution building in the stablecoin and tokenization market during the Gensler era, your only choice was ETH. You couldn't build on Solana. It might be a security. It might be illegal. You wouldn't build there. That's only been released for a year now. So when it's newer and it had this regulatory cloud that's been released, of course it's going to be smaller, but it's catching up. Again, I'm not sure it will catch all the way up. Doesn't have to. If it doubled versus ETH and the stablecoin market doubled, it's up 4x. That's a pretty good return. Those seem like very reasonable bets that the stablecoin and tokenization market will double and that Solana relative to ETH could double as well. And that's a 4x if both of those happen. Those seem like good bets. Yeah, so for what it's worth, I'm bullish on the set of them. And the way that I personally invest is to own all of them. What do I specifically like about the Solana setup? I think ease of use is a killer app that's underrated by investors. And even something like centralization, which is really important, that is an important philosophical difference. It has long-term meaning in the world. But for an end user who's trading, who's on-ramping, ease of use is the killer app, and Solana is just easy to use, just dead easy to use. The more centralized element versus the diversified L2 infrastructure or even subchains makes it just very easy to use. And I think the market overlooks that. So one of the reasons I'm so bullish on it is I think the market isn't looking at one of its killer features, which I think will cause it to win an increasing share of the market. And I also think it's been sort of labeled with this meme coin only overhang. because it was the center of that activity. And the history of technology suggests that even if like sort of jokes and fun things happen first on a network platform, that doesn't mean it doesn't develop into something very serious as well. So I think there may be a behavioral dismissal of Solana by some in the sort of traditional community that causes them to overlook it. And anytime you have those behavioral mistakes, and I'm seeing two in Sol, the meme coin thing, and then ignoring ease of use, that's sort of alpha in the market. I mean, look, in 10 years, I think it could be $1 trillion asset. In 5 years, I think it could be $1 trillion asset. I think that's relatively easy to imagine with potential upside above there. It's hard to give a precise target because it depends on the pace of growth on stablecoins and tokenization. It depends on whether Congress passes the Clarity Act. It depends on sort of crypto market cycles. But I think if you're looking over a few years, I think it could be $1 trillion asset. That's a 10x from here. Yeah, I really believe more in Bitcoin. Yeah.
Okay.
Yeah. Gold is too boring even for me.
I should good on the table.
I should.
It looks good.
It does look good on the table. I should add this thing. Maybe the one difference there, which I do think is a fundamental difference, is I think Bitcoin is fundamentally better than gold. I think it's actually just a better, unequivocally better asset than gold. And so I ultimately think it will eat the majority of that market. I actually think, so if I'm thinking of my my Mount Rushmore of crypto assets, like it's Bitcoin, ETH, Solana, and I think Chainlink may be the fourth asset on that mix.
Interesting.
If you're bullish on stablecoin and tokenization, then you're bullish on the intersection of crypto and real world assets. Well, if I only get to hold one, if that's the box you're putting me in, then Bitcoin, Bitcoin, Bitcoin. The reason for that is that I have every confidence that Bitcoin will win the digital gold store of value monetary asset space. I think that game is over and Bitcoin has won it and will just extend its lead. If you get into these other areas like ETH versus Sol, versus Avalanche versus whoever else you might want to name, I just have less confidence on who will be the winner. So if I had to pick one, I might pick the wrong one. If you let me pick multiple of those, I might be happy to do it. But since the question is just one asset, Bitcoin's the one where it's not going to face competition for the market it's going after. These other markets, even Chainlink in the Oracle space, those markets are newer and more competitive. There's more competitive threat. And so the way to invest in markets where there's more competition is, in my view, not to try to pick the winner, but to buy the whole bunch. Right. So that's what I would do in that space. So if it's only one asset, it's Bitcoin, Bitcoin, Bitcoin.
When Hougan looks at the forces driving this transformation, he points to debasement as the dark matter of finance. It is invisible to most people day to day, but it explains everything happening in the economy. Sky-high real estate prices, soaring stock valuations, and expensive everyday costs all trace back to one root cause: the relentless destruction of money's purchasing power. In just the last 5 years alone, the dollar has dropped around 30% in real terms. Hougan says this is not a temporary problem that governments will fix. Interest payments are now the second or third largest item in the U.S. federal budget, and the debt spiral has become impossible to escape without printing more money. He believes this debasement trade is just getting started. It may have been labeled in 2024, but by 2027 or 2028, it could dominate every major portfolio strategy on Wall Street. That means more flows into Bitcoin, more institutional adoption, and more validation of the thesis that scarce assets win in a world of infinite money printing. Beyond Bitcoin, Hougan also sees a massive opportunity in Solana. He applies the same two-way-to-win framework here. First, he believes the stablecoin and tokenization market will grow massively. The U.S. Treasury Secretary expects the stablecoin market to grow 12x over the next 4 years, and BlackRock's CEO says every asset will be tokenized. Second, Hougan says Solana will take an increasing share of that growing market. Right now, Solana is a $100 billion asset, 1/10 the size of Ethereum, but it generates the most revenue of any blockchain. Hougan believes Solana could become a $1 trillion asset within 5 to 10 years, representing a 10x opportunity from current levels. He calls it one of the best setups he has ever seen because of its ease of use, institutional appeal, and the narratives around stablecoins and tokenization. Hougan also points out that when he speaks to rooms full of financial advisors who control most of America's wealth, only 5% to 10% are currently allocating to crypto on behalf of their clients. Until that number reaches 90%, Bitcoin and crypto are still definitely early. For everyday investors, his advice is simple: buy, hold, and wait. He says the real alpha in crypto isn't in short-term trading, but in recognizing the long-term impact of this technology. The people who bought Bitcoin at $100 and still hold it today built real wealth, not the traders chasing daily moves. So here is the question. If history repeats and Bitcoin follows the same path gold took over the last 20 years, are you ready for what comes next? Please leave your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.